morning and welcome back. Business News now. Mike Eppel joining me right over here. Good morning, Mike.
Hello there, Melanie. How you doing this morning?
I'm doing all right. With the drive-in, took a little peekaroo at those gas prices as predicted. Bit of a climb. No surprise.
Yeah, what are we at? $1.91 now?
Yeah. Now listen, here's the thing.
Getting more expensive. More expensive.
Yeah, it's getting more expensive, and it's not coming down anytime soon.
No, and now we've got the European Union with this a ban proposal on Russian oil imports, and that's having a ripple effect on the markets this morning. I'm already watching the price for oil jump by about 3.5% because the EU will now be looking for other sources, and guess what? That's going to come from right here in North America. We've already seen a big increase in energy exports from North American producers overseas, whether that is oil, refined gasoline, diesel fuel, jet fuel, natural gas, liquefied natural gas shipments are way up. So all of these costs are going up. And, we're at $1.91 now and $2 per liter in the near future. Hey, let's keep in mind, it's already above $2 a liter in many cities across the country right now. The GTA is, we keep it local, but at the same time, a lot of Canadians are faced with even higher gas bills than what we're seeing. Here's the question, Melanie, what price point, what's the tipping point for consumers to actually start to change their driving habits?
Yeah, and I'm surprised because I know the figure, and I thought it would be much lower than this. But yeah, share with our viewers.
Well, again, it's based on percentages, and $2.50 per liter for some is where they would start to really feel the effects of this. But you look at some of the other numbers from this Maru public opinion poll, and already at $1.70 per liter, much cheaper than where it is now, 42% of Canadians who responded to this survey said they are starting to cut back on driving for even necessities such as getting groceries or doctor visits or things like that. So it kind of depends. I mean, look, some people can afford to spend more on gasoline and others can't, and it's going to have a wide-ranging impact on the number of people on the roads and potentially just for short trips, because those are actually the ones that kind of cost you the most when with poor gas mileage, I suppose.
That's
it. The longer trips, which you can't really avoid, if you got to go someplace a long distance, you're not walking necessarily, you're going to drive. And
with those implications, let's talk about some of the ride-sharing companies. So Lyft reporting, and what are their numbers looking like?
Well, Lyft saw a bounce back from a year ago. From the overall number of passengers, because there were all sorts of restrictions in place in last year's quarter. At the same time, however, the company's costs are going up because they're adding more driver incentives to attract new workers. They have raised prices to offset the price for gasoline, and the overall growth factor in Lyft's earnings are not up to expectations. So the share price right now, I just looked at it, it's down 25% in pre-market action. And Uber will be reporting quarterly results after the close of trade today. So that could be, Uber's a little bit more of a diversified company with grocery deliveries and other factors at play. But nevertheless, the ride-hailing business, a lot of cost issues there as well for these companies and hitting the bottom line.
Finally, for you, let's talk cost, home prices. This is interesting. Toronto home sales, the numbers, I'll let you break this down year over year and month over month. This is surprising.
Slowing down. The overall sales results for April showed actually a pretty dramatic come down from a year ago. Just over 8,000 transactions, according to the Toronto Regional Real Estate Board, which was down over 40% compared to April a year ago. Last April was just off the chart because interest rates were so low. The buying spree was in full effect last spring. We've seen interest rates, mortgage rates go up here over the past several months, and things starting to cool off just a little bit. And I have a feeling some of this is, a lot of it is actually psychological, because you don't want to be the last one to buy into a market that is cooling off and paying the most price or highest price for something that ostensibly could be less expensive going forward. So overall sales still, prices are still up year over year, 15%. But even those are coming down just a little bit. The average price now in the city, just above $1.2 million, still expensive, but down from the $1.3 million previous peak.
Still pretty pricey. All right.
It's still expensive.
Yeah,
like, there's no getting around that. But again, we've talked about this, how the market will adjust as mortgage rates go up. It just has to.
It has to. It must, Mike. All right. Talk to you tomorrow. Take care.
Thank you.